Welcome back to the Brooklyn Weekly Property Market Update, brought to you by Engel & Volker's Brownstone Brooklyn. My name is Katriona, of course, and I'm joined again by Donald. And we're going to talk about last week's data. So here we are, almost at what people call the end of the summer, Donald. And I think it's true that some schools are actually going back next week as opposed to after Labor Day.
Yeah, I have 3 children, and they're all going back to school in 2 different schools on Wednesday, the 1st of the month. So it's a little different from what I've ever experienced before for them in their schools. So I'm assuming people will be back in their homes locally here sooner than maybe a typical year. And activity, it'd be interesting to see what happens with activity picking up prior to Labor Day.
So let's start by talking about the luxury market above 2.25 million. And last week's data showed very similar numbers in terms of new to market and in contract to the previous week. Is that not true, Donald?
Yeah, quite true. 10 deals new to market last week versus 11 2 weeks ago and 9 3 weeks ago. So kind of very stable there on the in contract side. Likewise stable, 14 last week, 13 2 weeks ago, 16 3 weeks ago, and 15 before that. So very interesting to see that kind of stability. It's obviously down from highs back in the spring, but fairly stable and not currently trending down.
The average list price in the luxury market, however, does seem to be trending up slightly, with a 4.8 million average new to market list price this past week versus the 3.2 million of the week before. But what's actually driving that?
A couple of high-priced townhouse deals entering the market. One, a property that's been out there before in the same ballpark, 9.25. It's actually a little bit above that last time around. So that's obviously pulling the average up at that price point. And another at 7 and change in Cobble Hill. That first property, by the way, was in Carroll Gardens. Second property, Cobble Hill, and one other home in the 6 million range as well. So certainly pulling those averages up for last week.
So if we look at the market below 2.25 million, where of course inventory numbers are much greater, the new to market numbers look very consistent week to week around 29-30, but perhaps the contract numbers are trending down a little. Is that perhaps because inventory is just generally lower?
You know, it could be what we're seeing in the front end here of an inventory squeeze and less things to choose from, for sure. There is a little bit of a lag, obviously, and when things go on the market, as we know, if you've been following along, certain assets, certain neighborhoods, townhouses, $3 to $4 million range, very quick to find buyers. So sometimes as short as 2 weeks on the market, which is almost as tight as you can get between advertising a property for sale and coming to an agreement and getting a contract signed, basically. That's extremely fast. That's still a 2-week lag, and more typically like maybe even 30 days for those assets at that price point for those homes. So, so that new to market number has been trending down for a few weeks now, quite steeply. And now we have the in contract number likewise trending down. There's some seasonality there, as we know. It happens at all price points, but it's certainly going to be interesting to see what happens over the next couple of weeks as far as changes to new to market listings in any material way to increase to support the demand that is still there. And if not, we certainly could see a continued decrease in contract activity due to the lack of good choices by the buyer pool.
So let's end today's exciting broadcast with one reason why a seller who might be on the fence right now about listing should actually consider doing so in the next month. So shall I go first? Do you go first? I don't mind.
All yours.
Okay, so one of the things that I know we often talk about is the advantage of being one of the few available as opposed to one of the many available. And right now, there are certain asset types where there aren't that many of them on the marketplace. So if you take the opportunity now, you're going to have all those buyers to yourselves, as opposed to waiting maybe a month when typically after the Labor Day timeframe, lots of other properties come on the marketplace. So why don't you seize that and just do it for one thing that I could certainly think about. What about you, Donald?
Yeah, I think that's great advice. And, you know, there's no bias there. That's just a fact. And so I hope people receive it that way. And, you know, just extending what we were just talking about, you know, if that inventory is not going to rebound in any way, you'll certainly have more buyers looking at what you have out there, and, you know, still be reasonably priced. You know, price it with some real thought and introspection on your expectations of where the market is, and of course you should, you know, try to achieve every dollar you can in the shortest amount of time possible. But, you know, obviously be ready to react should you find buyers who are willing to put their offers forward. So yeah, so it'll be very interesting to see what happens over this major holiday weekend, the back to school. We have some lag here. I'm back to the office still. That's kind of fluctuating, where maybe there was some belief that was going to happen in a higher rate and higher numbers than it actually unfolded. A lot of those things being pushed back, some of those firms to later in the fall. So again, but that window of activity there due to holidays at the end of the year is quite tight, as you point out, Katriona. And it's, you know, it's as far as I'm concerned, I agree with you 100%. There really is no reason to wait with that short window of time, because then you have to take a pause and wait for the spring, and there's just be more days. So, you know, get on it. Anybody needs any help, some advice, some guidance on what to do, you know, don't hesitate to reach out, obviously.
So that's it from us. Check back in next week for more accurate, informed observations on the property market, and we look forward to seeing you again. Bye from me.
Have a good week.